Tamanna, I think the electoral bonds issue is something which the markets would be closely observing. I think you mentioned about Electra Green. I think its name figures quite prominently in the donors to the political parties. So I think clearly markets would definitely look at this very closely. Although this is a normal activity, I think these names coming in ahead of the election is definitely not a good sign. Our sense is that the markets would like to have more clarity on this, and clearly, I think the mutual fund stress test is also a very key factor. I think Quant Mutual Fund has already pointed out that they are pretty safe. They were one of the few funds to actually come out with the results of the stress test. So my guess is that the oil marketing companies are unlikely to move down further, because, as you rightly pointed out, a major part of the correction has already happened, and I think this was expected, from the government ahead of the elections. So I think, despite the fact that companies like HPCL could take a more bigger hit, I think companies like BPCL, IOC, I think would definitely figure prominently. If they come down further, I think good bets in the medium to short term, because the consuming sectors like aviation, automobiles, the throughput has increased significantly, and I think most of these companies have benefited from softer crude prices. So I think going forward, there could be a soft dent on their profitability, but nothing so major. But I think the electoral bond issue, Tavanna, could be a key element which could figure out in the early morning trade, and we'll have to see how the market digests all these numbers, because many new names, many prominent names. So I think clearly this is something the markets would like to discount, and obviously it seems that possibly there could be a minor correction initially, and then probably the markets would recover. But I think net markets would now be looking at the kind of election schedule, because the second list of BJP candidates has been finalized. So I think markets are awaiting now the election schedule, which I think which will set the tone for the markets going forward. Yeah, I think Neeraj, one can stay invested here, because the order book trajectory continues to be very rock solid, and I think in the solar water pumps they enjoy a market share of almost 40 to 45%, and the Kusum scheme, which has been formulated by the government, has been the trigger point for the kind of revenue and the growth which the company has recorded. This is a small order, so I don't think it's going to have any significant impact on the overall revenue and profits. But I think sentimentally, I think the stock could open up on a positive note. No, I think Neeraj, within the given space, I think KPIT Technologies looks to be quite attractive. From a longer term perspective, not only do they have a very good order book, but I think the kind of commentary the management has given, I think is quite reassuring. My sense is that L&T Technologies also should do well. But in terms of the price and the risk reward, I think KPIT Technologies could definitely give a better kind of risk reward if one were to take a 12 to 18 month view. I think the space is a niche space. Margins are good. And, some of these companies, which are in the space, the larger ones like L&T Tech, KPIT Tech, they have got significant amount of order book, which would give them good revenue visibility for the next, say, 12 to 18 months. So I think KPIT Tech looks more interesting. And we have been advising our clients to actually buy this stock on every decline. Very strong business model. And obviously, over the next, say, 12, 18 months, we could see a further re-rating.